So Mark, I'd like to thank you for sitting down with me today, spend a few minutes to talk about the American dream and investing world. I'd like to, if you could, share with me what your vision of what Matson Money is and its mission and why you're here.
Yeah, so over 29 years ago when I started the company, it was to really get away from what the brokerage community had been doing, primarily commission-driven investment, so-called advice, and then this thing called active management. And what I discovered was that people were actually speculating and gambling with their money instead of prudently investing it. So initially the company was designed to have people use an academic, empirically tested process, to manage their money. Throughout the years, we've gone deeper with that to actually look at how people can use their money and their purpose in life, to fulfill the American dream and create freedom and fulfillment and love in their family. So we've gone from a money management company as a foundation to a coaching company and a training company.
You've created this American dream experience, and I've been through it, and I have had the fortune of bringing my clients through it, and they have had immense success with it. They thoroughly enjoyed it. Talk about what that is and what that is for the investor, the impact it has on the investor.
Yeah. So the American Dream Experience is a 2-day workshop that actually starts before the 2-day workshop, because it starts with an investor inventory where a coach like yourself goes through an inventory with an investor to see what the problems are, where they've been successful, where they failed, what their goals are for their family, and then takes them through a process to discover, is there a better way to actually accomplish what they want in their life relative to how their money is invested. And then we have the 2-day workshop. The 2-day workshop is designed initially at the very beginning to help people discover a true purpose for their money. There's a lot of research out there that's done that show that people that actually have a purpose greater than money itself actually become better investors over time, because they're able to stop speculating and gambling with their money. And then we teach them the academics. There's a lot of Nobel Prize winning research out there in the areas of modern portfolio theory, efficient market theory, three-factor model. These are blind spots to most people. They don't even know that those things exist. And we actually coach them about how to apply empirically tested research to their portfolio, and then help them set goals. What do they really want to accomplish over the next 2 or 3 years for their family based on what their purpose is? And then it culminates at the end with an actual analysis of their portfolio so that they can see, probably for the first time, the exact amount of risk and volatility and expected return based on how they did or didn't build their own personal portfolio. So it takes it from theory and it brings it down to actual application for the investor. And then a week or 2 later, then, as you know, you meet with the investor and help them walk through what we call the American Dream in Action interview or workshop debrief. And the debrief helps them actually look at what they learned in the workshop and then how to apply it in their actual life. So it's a journey and a process instead of just an event.
As you go through that event, one of the things we talk about are the 2 sciences of investing. We know there's a behavioral side and we know there's a math side. And one of the things that I think people would love to hear is why they are so important together, and separately, if they're done separately, can leave people to make disastrous decisions.
Look, everybody knows how to lose weight. You move more and you eat less. Now, you can have different strategies to get there, right? But there's basically 2 main rules. They're not that complicated, but they're really hard to apply in life. Well, investing's not too dissimilar. I mean, the basic rules, own equities, diversify, and rebalance, are somewhat simple. Now, in application, it gets way more complicated. But investors even have a hard time following those rules. And that's because of our own way that the human body and mind has been programmed. One of the basic programmings for human beings is herding. If everybody else is doing something, we think that it must be the right thing to do, so we emulate what everyone else is doing. Now, it works great for zebras, not good for investors, because what investors do is they follow each other in herds. That's how you end up with a tech crash. That's how you end up with an S&P 500 crash, real estate crashes, gold crashes, Bitcoin crashes, tulip bulb crashes. And go all the way back to the South Sea bubble, one of the first crashes where Newton lost almost all of his wealth. So investors do this over and over and over and over and over again. So that's one of the biases that they have. So you could give someone a diet and say, eat this for 90 days, you'll lose 30 pounds. But they can't follow the diet. It's just like investing. They build the portfolio, engineer the strategy, but if the behavior doesn't go along with the strategy, ultimately it's doomed to fail.
So Mark, I've heard you talk many times about investing is not a transaction, it's an experience. And that tends not to be what we hear in commercials nowadays from Wall Street.
We believe, and through our training that we've designed, that you actually can discover investing in a community where people are sharing about their experiences, and you can have insights and transformations that you could never ever have. For example, most people, their default position for money is more is better. Or their default for investing is speculation and gambling to get as much as I possibly can. Well, if you look at helping them develop a true purpose for their life and for their money, I've very rarely ever seen that speculating and gambling is in alignment with what the real deep meaning and value and purpose for their life is. So then you actually then say, okay, well, how am I going to discover what the actual prudent methodologies of investing are? How do you recognize what speculating and gambling looks like? And contrast that to academic investing, and so that you don't get hooked and pulled off course. So without an experience, that discovery where people can discover this and learn from themselves. I don't know about you, I don't like to be told what to do. I'd rather discover it for myself. It has more impact. Yes. So it's actually a process of coaching that helps people discover for themselves what real investing is.
I'm glad you bring up the word coaching, because that kind of ties into this whole philosophy. And so us as coaches dealing with investors, it's not really about what we are telling them to do, it's them discovering it. And if you would, talk more about that and what the real value of a coach is versus a stockbroker.
It's that kind of dedication and that kind of hard work where you have the coach, you get the dream in place, then you have to have the strategies. We call that academic, empirically tested research. And then you have to actually fulfill on that. And that's where your coach comes in. Indispensable benefit is to actually coach you in the day in and day out, because you won't like it. When the market crashes and everyone says get out, you're going to want to get out. When one thing goes up 10, 15, 20, 30%, and the rest of the market's at 5%, you're going to want to chase that thing that's hot. You're not going to want to sell the thing that's high and systematically buy trust me on this one. You're not going to want to. You're going to want more of the thing that's high, and you're going to want less of the thing that's low, which causes people to sell low and buy high. The exact opposite of what they're engineered to do. I have found that without a coach, this is nearly an impossible. It's nearly an impossible task for people to do.
What would you consider some of the external forces that make it difficult for us as investors to really be successful long term?
Same thing goes with investments. And there are Wall Street bullies out there that win by getting you to speculate and gamble and trade as much as possible. When you look at commercials on TV or the Super Bowl about, online trading, that's all generated to make them money, not necessarily to make you any money. So the fact that you panic, they don't care. The more you panic, the more they make money. The more you're greedy, the more you get hooked, the more they make money. The higher the risk you take, the more they make money, because you're going to trade more often. All these things are counterproductive to an investor. So it's the Wall Street bullies that win. It's the news shows. I go on, on these Fox Business and CNBC and other cable news programs, Bloomberg and such, and they all want me to make a forecast about the future, because they're trying to convince people that if you can forecast the future, you can manage your money well. Well, who's the advertisers on those stations? the same people that are telling you that you should be trying to forecast the future. Those news programs, those shows, I've never had them ask me, Mark, how do you use academic empirically tested research to build a portfolio that's prudent, that puts your client in the best position to win long term? Never, not once.
Not one.
Not once. And I started in circa 2009 when I started going on TV.
One of the things that I hear often from my clients is we'll talk about diversification. Mm-hmm. And the client will tell me, Robert, I'm diversified. Mm-hmm. Or my stockbroker said I'm diversified. Mm-hmm. And we know there's a difference between diversification in terms of what a broker-dealer or a stockbroker thinks of and what, academically speaking, true diversification is. Tell us a little bit about what you mean by that and really how that's set up with Matson Money.
Yeah. Every investment professional, almost to the T, is always going to say something like, well, diversification is really important. You know, and if you ask investors, is it important? They'll say the same thing. Well, yeah, diversification is important. But how do you measure it? So you can start to ask very simple questions. And if you don't, you know, it will start to unravel the sales pitch that you're getting. Well, how would you measure it? How do you know if you're diversified? It's not a number of holdings, because those holdings could all do the same. If it's 500 holdings in the S&P 500, they are all very highly correlated and they're likely to do the same things at the same time. So that's not diversification, even though you would own 500 stocks. What you really want to be able to measure is how similar, or meaning that things go up and down at the same time, or dissimilar, meaning that they tend to offset each other. And then you have to have a scientific way to measure it. Then you could measure whether or not the assets in your portfolio have dissimilar price movement. And then you'd also then have to calculate the expected rate of return of those asset categories. Because, for example, if I take the S&P and I look at gambling at a casino, has zero correlation with the S&P, but has a negative expected return. So now you need something that has low correlation or lower correlation and a expected return to add to the portfolio. And if you're not using science to measure it, it's called means variance investing. It won a Nobel Prize. Harry Markowitz is on our academic board, and he was the father of modern portfolio theory, and still is. But you got to measure all this stuff scientifically. If it's not measured, it's not diversification in my book.
Have you ever come across a portfolio outside of Matson Money's that fit that description of true diversification?
No. I never have.
Not one, right?
Not one, and we analyze thousands a year. Could there be one? Maybe there's one in our software system somewhere that we analyzed, but I haven't seen it, and I've seen thousands.
So Mark, you said earlier that, you know, for the last 29 years that you have been fighting this good fight. And I've been knowing you now for just under 4 years. And even before that, when you go back and look at videos that you have done on Fox Business News or CNBC, your message has always been consistent. It's always been for the long-term investor, not for short-term profit of speculating and gambling. How difficult is that to stay true to that core when the external forces are always beating on you to try and make you change?
Once I really believe in something, you know, I tell investors they sometimes ask me, what kind of coach am I looking for? Well, you're looking for the coach that, number one, won't abandon the discipline of the investing process. And number two, you're looking for an advisor, and they're rare, who would rather lose you as a client than tell you what you want to hear just because they could keep you. And in my experiences over 29 years, those people are rare. You find one, you need to stay with them. And then the other thing is that I didn't create these theories and philosophies and academic investing principles. You know, I have relied on the research of people like Harry Markowitz, Nobel Prize winning for efficient market theory. And then we have third-party academics validate the research that they did. So we're not just taking their viewpoint or their research. We then have Dr. Lymanot, who's on our academic board, who a PhD in statistics, has actually written books for master's and PhD level. You know, my job is to understand the research and then to help investors apply those in the best efficient method. And we do have nearly 29 years of actual track record. The final test of any kind of research is it applicable in the real world? You want to verify and then trust. And the problem for most investors is they trust way before they ever should. And they don't do the verification piece. So a combination of, and I know that you and other really great coaches have a very similar viewpoint on it, is that just stubborn enough and loving people enough not to want to hurt them. And then humble enough to allow the researchers that specialize in these areas, you know, to be our coaches. And that's how it works.
So Mark, I can't tell you how much I appreciate you taking time to sit down with me to go through all of this, kind of tell a little bit about your story as a company, how it's evolved, and the amazing benefit that you have offered to investors around the world. I would love to sit down and do this with you again sometime soon.
Absolutely.
But I appreciate it very much. Thank you for spending time with me today.
Thanks, brother. You got it. My pleasure.